In this video, we're going to address whether I think Bitcoin is going to go up in the short, medium, and long term. And we're going to break this down into those three parts, and I'll give you my reasons for all of them. It's worth noting that I correctly predicted the double top of Bitcoin in 2021, nearly both of the dates to the day, using some CPI tricks and analysis on Bitcoin's behavior. I also called the stablecoin collapse. I warned of the collapse of cryptocurrency exchanges well before they happened. And I recently called for Bitcoin to go under $58,000, which it did. It fell all the way down to approximately $53,000 as we were getting a lot of liquidations from the German government and some associations to Mt. Gox. Now, that might now be behind us, which is really great news, which means now we can focus on the short term. What do we have to look forward to, or do we have something to look forward to in the short term? Well, the answer here is yes. The first thing we have is the likely approval and start to trading of the Ethereum ETFs. Remember, ETFs are exchange-traded funds, and we've seen incredible inflows into the Bitcoin exchange-traded funds, and we expect a lot more mainstream adoption for cryptocurrencies by financial advisors and institutions when they have access to them through ETFs. Now, hardcore crypto enthusiasts look at this and go, I don't need a Bitcoin ETF. I want the keys, not your keys, not your crypto. But many who use Ethereum or Bitcoin as a hedge in a portfolio or even within another ETF, they don't have that luxury. For example, I operate an actively managed exchange-traded fund. I can't own crypto in this unless it is in another security wrapper, like another ETF. So it's kind of like an ETF holding an ETF along with other positions. By having Bitcoin and Ethereum ETFs, I can put into my ETF Bitcoin exposure or Ethereum exposure, which I couldn't otherwise do. And since ETFs are growing in such popularity, we think the inflows into these sort of crypto ETFs will continue to rise, so that way actively and passively managed ETFs, exchange-traded funds, can have exposure to these assets. In the short term, in addition to the Ethereum ETF start to trading, we believe, or starts to trading since there'll be multiple of them, we believe that the potential election of Donald Trump would be expected to be a boon to the crypto market, both Bitcoin, Ethereum, and of course, the rest of the alts. Now, Donald Trump just today announced his VP candidate, Vance. Vance has disclosed that he owns about $100,000 to $250,000 worth of Bitcoin in his Coinbase account. This is an indication that Vance might be pro-Bitcoin and pro-crypto. It's not just that, though. Vance has also suggested he was preparing to introduce a full crypto plan in July. That would overhaul the CFTC and the Security and Exchange Commission, CFTC being the Commodity Futures and Trading Commission. Vance mentioned that he would introduce the legislation next month in June. So we might expect an introduction to some form of crypto plan this month, though I'm not going to hold my breath. Now that he's been essentially chosen as the VP nominee for Donald Trump, I don't really think JD's going to want to rock the boat. Think about how much he rocked the boat in September when he introduced a bill to remove the $7,500 vehicle tax credit from electric vehicle manufacturers and give that $7,500 to gas-powered vehicles. That's something that really upset the electric vehicle community. This came from the Inflation Reduction Act. But in my opinion, this, which is a bill that died in committee anyway last year, it's a dead bill. You don't really have to worry about this. It hasn't been reintroduced as far as I can tell. The point of this was really a messaging bill. It was a messaging bill to suggest, hey, I support the UAW. And it was introduced in September of 2023, which what else happened in September of 2023? the UAW worker, well, United Auto Workers, strikes. So that, in my opinion, was really a messaging bill to suggest he supports unions. I don't necessarily think it was a way to say, hey, I'm anti-EV. It was a way to say, hey, he supports unions. Now, the other thing to know, or why this relates in the first place, is by suggesting, hey, I'm going to introduce an overhaul of the SEC and the Commodity Futures Trading Commission to make it more conducive to investing in cryptocurrencies. It really sends a message that JD is a crypto homie, so to speak. He's all for people being able to and having the rights to invest in these assets without ridiculous regulation from the government that makes it hard for brokers to legally and compliantly, or operate in a compliant manner, makes it hard for them to do so. For example, JD voted with a crypto bill to make sure that banks no longer have to disclose crypto assets as liabilities. But that bill, even though it was voted on and passed, was later vetoed by the Biden administration. And when I say Biden administration, technically Joe Biden vetoed it, but let's be clear, the Biden administration vetoed it. Anyway, in the short term, the choice of JD Vance is probably good for cryptocurrencies. The Ethereum ETFs are probably good for cryptocurrencies. And the potential election of Donald Trump, all probably good for cryptocurrencies. So the more likely it is that Donald Trump gets elected, the more likely it is, in our opinion, that cryptocurrencies rise in value. And this brings up the unfortunate and near assassination attempt of Donald Trump. This has been related to two different assassination attempts. The most recent one being Reagan in 1981. And then, of course, we also had the assassination attempt on Teddy Roosevelt. Teddy Roosevelt's an interesting one. We're going to talk about that in a moment. Now, after Reagan had this attempted assassination in 81, he won in a landslide victory in 84. I mean, I think only, if I remember correctly, only Michigan, or no, it was Minnesota. Only Minnesota voted blue in the Electoral College. Everywhere else in the country voted red for Reagan, with the exception also of DC. I'm pretty sure DC was blue. Anyway, the point is, he won in a landslide. A lot of people credit the assassination attempt as rallying people around voting for somebody that they believed in. As people who didn't know they wanted to vote. People who knew they were going to vote but weren't sure they were going to make it out, made it out to express their support for Reagan. Now, there could have also been a lot of other reasons as to why Reagan got elected. The economy was doing much better. Interest rates were finally coming down after Paul Volcker raised them to extreme highs. So there are plenty, which actually parallels to now, right? Under Joe Biden, we got the highest interest rates because of the choices of the Federal Reserve, obviously thanks to inflation and some other issues. But a new administration will probably have the benefit of lower rates. Either way, Reagan in 81 did benefit from a stronger economy in the mid-80s, sort of an economy coming out of a hole. Maybe now we're starting to come out of sort of this post-COVID like adjustment everyone's been going through. But the assassination attempt has been really credited for helping Reagan win. Well, why then, when there was an assassination attempt on Teddy Roosevelt, did he lose? Well, even though Teddy Roosevelt, as legend has it, was giving a speech, was shot in the chest, and then kept giving his near 90-minute speech, and then went on to live for another approximately 7 years thereafter with a bullet in his chest. One of the reasons he was able to keep going was apparently it didn't lodge too deeply or didn't hit an organ. He had like a 50-page speech set of documents in his chest. He also had a metal glasses case covering the exact spot where the bullet hit, so he got quite lucky. But why did Teddy Roosevelt lose then? Well, Teddy lost because he ran third party, not necessarily because people didn't want Teddy Roosevelt. He already ran and had 2 successful terms before that. So he was actually going for a third term as president, and he was running third party. A lot of people actually think because he ran third party, he lost, not because the assassination attempt rule might not hold. But anyway, the argument here is that there's a reason why Teddy lost, And while there could be a reason why Reagan won, a lot of people liked him, even Democrats liked him, it is possible the assassination element could help boost crypto in the short term. So you've got a lot of positive short-term elements for Bitcoin and crypto in general. You've got Trump, you've got JD, you've got the assassination attempt, and really you've got this continued failure of Joe Biden. Now, when we talk about this continued failure of Joe Biden, it's really important to remember that we're not trying to politicize the issue by suggesting, oh, Joe Biden is a problem or is bad for crypto. We're trying to be very blunt and blatant in saying that Joe Biden is unfortunately senile and he's not making the decisions. I really feel bad for that because it's not something it's not your choice if, you have dementia and you turn senile. But it's really up to his cabinet and his administration to help regulate crypto and streamline crypto regulation. And let's be clear, his administration has no interest in doing this. And this contrasts to Donald Trump, who's now confessed to wanting to be the first United States crypto president. So, in the short term, between now and the election on November 5th, I actually think there's quite a high likelihood that Bitcoin ends up breaking 80,000, which would be greater than all-time highs. Now, fair disclosure, I have opened a position in Bitcoin. I did so this weekend, and I sent an alert to everybody in my course member live streams. You can learn more about those over at meetkevin.com. In addition to that, I also this morning sent another alert that it opened a large option position on a particular ticker, which is also in my fund, but I'm not advertising my fund here. This is not an advertisement of fund. I want to be very clear about that. And that is BitX. Now, BitX is very dangerous. It is a 2x leveraged ETF. That means if Bitcoin goes up from, let's say, 80,000, it goes up to $160,000, which would be a double. And let's say you had $80,000 in it, rather than having 80, you would be getting 80 and another 80, which is awesome. And this would be the benefit of a leveraged ETF. Now, the downside is if Bitcoin loses 20% in value at 80,000, let's say, that would be minus 16 on a normal, but with a 2x leverage, you'd be down 32. So this is just an example of how a 2x leveraged ETF could hurt you, and I would be very careful on those. I think those are investments that you really make that are more sort of bets or trades. So just beware that leveraged ETFs are generally not for long-term trading. But I do think between now and the election, there is some desirability into this sort of Bitcoin X ETF. I'm not affiliated with them. It's not my ETF. I'm not sponsored by them or anything. But I think it's interesting. It's a 2x leveraged ETF. You get 2x the return if it goes up. It's great if it goes up. Bad if it goes down. Anyway, so I do have exposure to this, and want to be very clear about that. That is how I'm playing it. I'm playing it by investing in Bitcoin itself, but then also the leveraged ETF. Okay, so that's the short term. So now let's briefly hit the medium term. The medium term is really going to be post-election, and the medium term really breaks down to what's going to happen with inflation. So I'm going to put MT for medium term, and in my opinion, everything here comes down to inflation. I realize that folks see Bitcoin as an inflation hedge, but really Bitcoin is not, in my opinion, an inflation hedge. What it is, it's a hedge against the US dollar. And usually when you have an inflation or an inflationary environment, the actual underlying currency of that country becomes worth less and less and less. Its purchasing power goes down as the money supply expands. And Bitcoin sort of protects your purchasing power. That's the idea of being an inflation hedge. But it doesn't necessarily mean that Bitcoin doesn't go down in value. Obviously, we've seen during 2022 when stocks were plummeting, Bitcoin was plummeting as well. So that's why some see it as more of a risk asset than an inflation hedge. But let's be clear, the idea of it being an inflation hedge is a way of saying, look, I want to move some of the money that I have away from the dollar because it's always going to go down in value. They're never going to stop inflating the darn thing, is what it seems like. And in the history of fiat currencies, currencies have always been inflated away to zero, and they've always collapsed. There is no fiat currency that has ever survived in the long term. But this doesn't matter so much for the medium term. For the medium term, inflation, the way to look at this is the more inflation goes down, in other words, the more we get disinflation, probably the better it is for Bitcoin. Because what you want is you want disinflation, because then you could get rates down, and then you'll probably see a continued, absent a crash, obviously, rise in asset values like real estate, like stocks, like bonds, and like crypto. So what do we expect for inflation? Well, if we look at really the leading indicators of the leftover junk that we have in inflation, most of it is shelter. And the Labor Department just today released an update on their index that housing-related inflation just fell from 5.4% in Q1 down to 3.9% in Q2, which is a massive drop. And if we actually compare for new leases rather than existing leases for housing costs, if we look at new leases, this actually came in negative. In other words, we're starting to see some of the leftover portions that are leaving inflation high come in negative, which is a great indicator that we're going to be able to get those rate cuts soon. Right now, we're pricing in one rate cut for September. We're pricing in a second rate cut for November. And by January, we're pricing in about 3.3 rate cuts. So that could be a third cut in December, and then, who knows in January what happens, or they'll skip a meeting or whatever. But anyway, that's what the market's pricing in now. And that should also be good for crypto going forward. That's Bitcoin, Ethereum, and the alts, as long as we don't have a jobless recession. See, if we don't get disinflation rapidly enough, the effects of high interest rates could end up taking hold in the medium term, which is generally considered to be 6 months to 18 months. So call this 6 to 18 months. I like to call this post-election, at least that somewhat aligns, roughly 5 months from the time of making this video. And so I would say post-election, the biggest risk here is that you have a lot of job loss, which leads to the liquidation of assets, which leads to GDP contracting, and leads to a recession, which I do think in the medium term would be very bad for cryptocurrencies, especially a leveraged ETF. Okay, so now we have the medium term out of the way, and we have the short term out of the way. What about the long term? Okay, so the long term is generally where we compare Bitcoin to gold. And really, the best thing that keeps the long term going for Bitcoin is we hope that regulation is going to help. And so that's why we hope that an administration like this will help. Personally, I think you're going to get more benefits out of that in the short term than you will in the long term, because usually there's a lot of hope in government policy, and the reality is usually a lot more depressing. So positive regulation is a longer term hope. The second thing that we hope here is that the continued sort of scarcity of Bitcoin will lead people to continue to use Bitcoin. There we go, kind of write that right, whatever, as a way to store value. There is a downside to this scarcity argument as well, though, and that's that if we do go into an environment of very low inflation because of the creative destruction forces of innovation through artificial intelligence or whatever, we actually start running into an environment where we're running below inflation targets, the scarcity and a purchasing power hedge might become less important, the inflation hedge, right? The, oh no, our currency is about to implode hedge. Long term, that might be important. Very long, very, very long term, I should say. That'd be like V long term. But, after like 2 years from now, so we'll call this 2 years out, I would say really you want to see regulation coming in to help support crypto prices. you actually kind of want to see some inflation, so that way, there's a continued reason to buy cryptocurrencies. And then, of course, there will always be a reason to buy cryptocurrencies for having access to your own capital, having the government out of your life. This is very important. And that also increases what we call the network effects. The more people using it would mean the more people transacting in it, other countries taking, enabling the use of cryptocurrencies as money, like El Salvador, or corporations having the cryptocurrency on their balance sheets. All of these things would be very, very beneficial. However, you are going to compete against gold, and nobody likes this argument, and you're also going to compete against a fiat. So even though fiat is frankly worthless, it's paper money, it does have four things going for it that, unless you get a lot of really good regulation, it's really hard to fight. First of all, fiat is protected by a strong economy. The stronger the U.S. economy goes, and the longer it lasts as a strong economy, the more supported the U.S. dollar is. That doesn't mean you should hold the dollar. I'm a big fan of holding assets like stocks or real estate or cryptocurrencies at sometimes over fiat. I think you should always get your money out of fiat, but whatever. So a strong economy. The other thing fiat has always going for it, until you have governments really adopt it as tender, which I'll tell you why I don't think they will. You have the military, and then you have trade. You got to have the dollar to trade with us. And then, of course, reserve currency. So that reserves could end up going away, but you're still going to have trade, military might, and strong economy. All of these are really benefits to fiat. They could be benefits in the long term to cryptocurrencies, but I have a fear that there's some reason why that might not happen. And the reason I suggest that might not happen is because there's something really addicting about being able to do this one thing that you can't do with Bitcoin, and it's called print money. Now, technically, the Federal Reserve doesn't really print money anymore. They just digitally alter it, and the Treasury Department, the transfers between the two, and they send the money to banks and stuff, and blah, 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 whatever. The easiest way to think about it is the government creates money out of thin air. You can't do that with Bitcoin. You've got 21 million total supply here. We'll probably stop mining Bitcoin sometime in 2140, which we don't have to worry about that point. We'll still be mining Bitcoin for quite a while here. But you can't print more after that. There's this finite supply, which theoretically, having a finite supply should increase its value, right? We'll come back to that. We're going to talk about this idea here of I'll write it over here. We'll write finite supply, which really is sort of a subpoint of point 2 over here anyway, but I just want to make a note there to touch on it. So the idea, though, of printing money is very addicting, and I think that when countries I think they go through these phases. When a country fails, so a currency fails, I think it's going to be very easy to go to something like Bitcoin, or what they used to do is they'd go to the dollar, and they use it as a crux, or crutch, I should say. You kind of use it to get back up on your feet. Like you went bankrupt and you got to restart, right? So they use Bitcoin or the dollar or whatever to get back up on their feet. Once they're back up on their feet, somebody is going to go back to reintroducing some form of fiat and a central bank, in my opinion, because it allows the Ponzi of printing money to start again. And people might go, well, why would anybody vote for that? Well, because the fiat candidates are going to promise you a bunch of free money, and the real money candidates are not going to offer you free money. So people are constantly going to make the same mistake forever and eternity, and they're always going to re-vote back in fiat and central banking policy. So I don't think you're ever going to actually escape fiat. This is going to look different. Every century you'll have sort of different fiat that rules the world. So that's always going to be this long-term temptation that I think unfortunately keeps real money and Bitcoin out as a long-term government asset. Again, they might want you to be able to invest in it or whatever, positive regulation. But this is where this finite supply issue comes in. Even though Bitcoin has a finite supply, there's more to supply than just supply that drives price, right? Price is always equal to a balance between demand and supply, or supply and demand, the supply and demand curve, right? It's always a balance of the two. So then the question is, okay, well, if we have a limited supply, price is solely determined by demand. Correct. And this means we need people to keep buying Bitcoin for it to go up. Correct. So when do people like buying Bitcoin? People love buying Bitcoin or crypto in general when it's going up. Now that doesn't mean it can't dip and be volatile, but as long as this trend is up and there's this consistent belief that, oh, there's something else coming, the election of Trump, the choice of JD, the ETFs, a positive crypto regulation over the next few years, whatever, funds adopting exposure to crypto, whatever it is, as long as there's a belief that demand will continue to rise, driving price up, price will probably go up. It's self-fulfilling. But the problem is, what happens when after some period of time, Bitcoin, let's say, hits, I'll just make it up, hits $150,000. And then it comes down, I'm just making this up, to $120,000, and then it stagnates. And we have this period right here of, let's say, 10 years of stagnation. Well, you might lose the desire of people to continue to buy it. And that means once people start selling, you could slowly trend down. I'm not trying to be a Bitcoin bear, and this is not necessarily what's going to happen. This is just an argument that some people make, that the long-term demand over the next decades may not be as robust as people believe. And again, I'm just trying to provide a balanced argument on both sides here. This is where people say, oh, well, gold is interesting because gold has something that Bitcoin doesn't, and that is an intrinsic value. So even though we do mine new gold, about 3 to 3.5 trillion metric tons a year, we use gold in practical purposes. We need it. We can't just pick something else because about 8% of gold, once you net out the recycled gold that we use for electronics, is used in electronics and semiconductors. About 50% of gold is used in jewelry. Once you net out recycling, you're probably about 40%. So even though supply is growing, it's growing at a very, very slow rate because it does have an intrinsic value. And that's not to say that Bitcoin doesn't necessarily, but if it were Bitcoin or Bitcoin 2.0, all of the same principles could apply. But we can't as easily replace gold with something else. We still need it for specific purposes. So this is where a lot of folks who are gold bugs argue that gold could have a longer term upside. I don't necessarily know if that's true, but it's something to think of. So what I think we've done here is provided a balanced overview, and I'd like to give a bit of a summary here of my thoughts. So that way you can kind of see where my mindset is on this. And remember, you could always go to meetkevin.com to learn more about my perspectives on building your wealth. We do course member live streams every day where we like to do fundamental analysis or real estate analysis or answer your questions or whatever it might be. So let's summarize this. In the short term, my opinion is that we are probably going to 80K plus by election. In the medium term, so this would be post-election, absent a recession, medium term, I'm going to say, absent recession, I do think it's possible that we could get as high as about 200,000. I think that's probably where we cap out in the medium term. In the long term, I don't know. This is really going to come down to what actual regulation do we get. Once all the beneficial catalysts are gone of companies coming on or countries coming on or funds coming on, what direction do we go? Do we actually go to sort of a Cathie Woodian target of 1.5 million or do we go to 15,000? I have no idea. But what I would say is for the lens that I could look at going out from now, and I can't really see in the future at all, but my thesis is that we're probably, absent a recession, up from here. What happens in the long term? Absolutely no idea. I could see either of these realities happening. Again, if countries go back to fiat after having Bitcoin and it just ends up being a bridge tool, it could be closer to a low number. Everybody's adopting it as real tender. Thanks so much for watching.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.